Hello, everyone. Welcome back into the Prospero.ai stock market live streams. I hope everybody had a great weekend. As all of our regular viewers tune back in here, please be sure to like the video if you enjoy these live streams, the topics we cover, and are excited for today's stream. I'm going to take you through some of the signals we are seeing to start off this new week in the Prospero app, the net option sentiment for the SPY and the QQQ, which are both red actually at the moment, but not a lot of volatility today. Both very close to the flat line, only about a quarter of a percent off the flat line for the QQQ. SPY is almost dead even. The VIX is slightly up, and the Dow and the IWM are actually up today. So split market as we go into today's market. So let's take a look at the SPY and QQQ in Prospero, which have been higher. I see a comment also from Steven Rodriguez. Good morning to both of you, and thank you for everything you guys do for all of us viewers. You're welcome, Steven. Very happy to hear that you enjoy the lives, and you have a very nice name, if I do say so myself. Okay, so the SPY is currently looking at a 52 net option sentiment reading in the Prospero app, and we've been keeping the bull line for the SPY net option sentiment and the QQQ at 40, so it's well above that level, so still in the bull zone. And the QQQ is at 50 currently right now, so both in bullish levels and well off the lows and the ranges that they were at just before the end of last week. Spent a lot of time in the 20s for the QQQ, single digits for the SPY most of the last couple months, so maybe a bull move in the works here. If you guys get our investing newsletter, you probably saw we're going to go over a lot of the stuff that was in it if you don't get it, but pretty bullish tone in the letter this week that came out last night. Some cool things mentioned, which we're going to go over, like the ZWIG indicator, M2 money supply, how Bitcoin, George could be using Bitcoin now as a sense of volatility in the market and risk appetite in the market. So a lot of stuff to go over from the newsletter. Then we're going to talk about this rally that we're seeing now, although maybe taking a bit of a cool off period today. We do have a lot of earnings this week, so maybe that's kind of investors are waiting for those to come through as this week progresses. But is this bullish move we're seeing in the markets a bear market rally, or is it the start of something that can last a little bit longer and has more legs to it? There's also reports that are unofficial as of now, but there could be trade deals announced as early as this week. And if you guys watch these live streams, I've heard George mention over and over how we need the actual deals for the market to really feel better about the current situation. We've kind of been moving off headlines and narratives and just like hypothecations, but once we get the actual deals, it could be very good or bad, I guess, for the market, depending on how the market views them. So it looks like we could be getting them as early as this week. I think I saw Besant is set to speak. The White House reported tomorrow, so people are thinking possibly that could be a trade deal announcement, but we'll have to wait and see. Then, like I said, there's so many earnings this week, so it's the busiest week of this round of the earnings season. We're going to go over a lot of the companies that are set to report. One of the topics I want to bring up is the fintech space. There are two set to report tomorrow pre-market, and those are PayPal and SoFi. And then there's another one of our favorites, Robinhood, later this week. So within those three companies, how do they rank? Which one is George's favorite? Which one looked best in the signals? And just going forward from here, I see a lot of hype on Twitter for SoFi, so I'm wondering if that's one of the more popular retail investor stocks heading into this week of earnings. Then we have a lot of the Mag 7 companies to report. So we have Apple, Amazon, Meta, and Microsoft all set to report this week. So huge moves can happen in the markets depending on how those earnings come through and what those companies say. If they're anything like Tesla, it might be less about what they actually report and more about what they're guiding for and projecting, but all of those to go through. Steven said Robinhood for sure. If I have to guess right now between PayPal, SoFi, and Robinhood, even though George has his qualms with Robinhood, he might choose them just because I feel like he's feeling more bullish on the crypto, everything related to crypto and I think they have the most exposure there. So you might be right. Okay, so after the Mag 7 stocks, we're going to get into Spotify versus Netflix. So we saw Netflix react very positively to their earnings release. And when we were talking about it on the streams, George actually had very positive comments on Netflix and actually predicted, which now we're going to have to come back on it in about a year from now. He predicted that Netflix will outperform NVIDIA. And we posted that as a short, I think last week, maybe early last week, or maybe even 2 weeks ago now. But I want to ask George, is Spotify the Netflix of the music industry? And if so, which is a better industry to be the dominant leader in, music or streaming? So we'll go over that. Spotify stock has been very strong in recent years, leading the market higher and higher. So we'll take a closer look. Then more companies reporting: Coca-Cola, Starbucks, and McDonald's. And we had a topic we didn't actually get to last Wednesday, so it fits in well with these companies about how the Trump administration is banning synthetic food dyes, which when this was reported, the companies that were set to be hit were PepsiCo, General Mills, Kellogg's. A lot of cereals, candy, chips, soft drinks are affected by this. So knowing how the market feels about that kind of ban and how it's going to drag on maybe these companies that are very processed foods, I'm wondering if Coca-Cola, Starbucks, McDonald's, are they untouchable now to George, or does he think that these companies can kind of, manage their business around what's set to be happening in the food space? Steven said Netflix is good. Spotify is the SoundCloud of the music industry. Is you think so? Spotify, but I feel like Spotify has such a great subscription business, and which reminds me of Netflix almost. Um, does SoundCloud have anything like that, like a subscription? I know SoundCloud is a lot of what like artists who aren't really signed or just are like making music on their own dime, I guess, post on. But um, I'm wondering if there's really competition there between Spotify and SoundCloud. One more topic we're going to get into today before the end of the stream. Probably this is part to do why the QQQ is currently red. It was reported today that Huawei is creating a new AI chip that is highly competitive to NVIDIA. So NVIDIA actually opened up red today. Let's take a live look at NVIDIA, see if they're still red. Okay, yes. So NVIDIA is currently down 3%. So NVIDIA is not feeling the bullish spirit that we were seeing in some of the QQQ and SPY signals. Taking a look around the other chip stocks, see if anything else is being affected. It looks like most chip stocks are red today. Intel is actually green and SMCI is still green. So there's two there, but most are red. And George has kind of been highlighting the fears for NVIDIA on a lot of our streams recently. Now he's not really interested in the chip space and all of the negative risks that are kind of weighing on NVIDIA. So I feel like he's been warning about this for a while, but just another one, just another risk added to the list that he's been covering. Competition from China and Huawei. I'm wondering, we were talking about last week how 47%, I believe, is what it was, of NVIDIA's revenue went to China or China-related companies. And I'm wondering if China was able to just basically copy the chips and make a version of their own that was relatively similar. Hey, George, welcome to the stream today.
Oh.
I see Steven said it will rise in about 23 minutes to 2%. Fingers crossed. We will see. If it's going to be following the net option sentiment signals for QQQ, maybe it will be a buy the dip moment for NVIDIA from here. Let me tee you up though, George, for our first thing I want to get to. We have to cover
Hold on one second. There's something playing in the other room. I gotta.
No problem. Steven said good morning, George. All right, let's check in on the likes we're getting on YouTube right now. We really gotta work on getting these likes up to 10, 20, 30. Let's see if anybody can hit that like button for us right now before we get into the topics here today. But I would really want to cover kind of the letter more in depth maybe than usual today, because I feel like it was one of those letters that was pretty important, maybe since that Stephen Cohen letter, the biggest switch up in kind of tone and like perspective that you guys gave on the markets, covering the money supply, the ZWIG indicator, which I had never heard of before it was mentioned, but the history of that was pretty cool to learn about, and just the general bullishness I feel like with Bitcoin and maybe the move in the market over the coming future. Obviously, we're seeing net option sentiment SPY and QQQ rise, so that I'm sure like led your little bit of a flip into being a little bit more bullish. But yeah, if you just want to cover some of the things that were in the letter, talk about how you're feeling. Is it truly like you think a change in how you're viewing the market now?
What's QQQ and SPY and option sentiment at?
52 for SPY and 50 for QQQ.
Good morning, Stephen. Rodriguez and Foster. So I think it's interesting, right? Because we were here right here, and it was actually like one. I think probably our most popular like non-company video. I think a lot of times the Tesla videos are the most popular, but we had one for Nvidia or whatever. But talking about how you should kind of throw out technical indicators because of how news oriented the market is. So I'm of two minds. I'm of a mind that yes, we have to take this bullish movement seriously, and there's some really good technical indicators. And actually, I found the graph we shared on how well money supply increasing leads Bitcoin. I found that to be one of the most compelling things, and the reason we got into MSTR this morning. But that's not looking like the smartest decision right away. But I think we're in a spot where, you know, we're staying pretty even long short regardless. We got pretty twisted long last week, and I think that was a good it was a good move because we had very strong SPY and QQQ net option sentiment signals. But you know, on the other hand, there's still a lot of economic concerns, and I think for the first time, you know, we started to hear people's Temu prices went up this weekend. And I think that that's like the first time all of this has gotten real for people, and consumer confidence was already, you know, at low levels. So I definitely want to play this bull momentum. And that's why we're kind of more long than short, but I'm not feeling very secure about it, even with that ZWIG, and I don't even know how to say that. I was calling it ZWIG in my head. Even with that ZWIG indicator, I mean, it's very compelling in terms of, especially over long time horizons, how much that pays off. But we're in an interesting time, and I think you can also say, well, you know, this is kind of unprecedented in terms of, you know, I would say especially the first 100 days, how much policy has interacted with the markets. But yeah, it's on the one hand, I'm more hopeful, but also there's just too many risks in the market for me to feel too comfortable.
Don't trust me on the pronunciation. I was just going for it myself. But can you talk a little bit, like you talked about the M2 and how it affects Bitcoin? I think a lot of people have heard how the money supply going up and the M2 supply like is good for assets, but maybe they don't know directly why. So you talk a little bit about the background for it.
Well, I mean, a lot of the time, money supply, um, I mean, it can mean a lot of different things, right? It just basically means how much money is being printed, and there's lots of different ways to, you know, manage currency, manage an economy. But you know, and people could print money because they're in debt. People could print money because they're actually just trying to move their currency in some way. There's a lot of different reasons, but I think why why Bitcoin tends to go up when that happens is it's like overall, if you're printing more money, you're kind of decreasing the value of the money out there, right? Relatively. And Bitcoin that has a much more fixed supply, that becomes relatively more valuable. It's very easy to see how those two things are connected.
And I don't know if you saw it in the snapshot of the topics I sent you today, but one of the questions was, does George have laser eyes? And I'm asking that because I know Bitcoin isn't in our signals. So like when we are excited about crypto, we play it through like MSTR, Coinbase, and all the stocks that are related for it. But would you suggest like just purely investing in Bitcoin itself, or do you actually prefer the stocks that are, companies that are surrounding the crypto space?
I mean, I have my reservations on crypto overall because of the non-transparent options markets and things like that. But it's hard to ignore when our signals are looking so strong in MSCR and coin. I mean, at the end of the day, it's a little less complicated to get in and out of um Coinbase and MSTR and like a Bitcoin ETF, but it's really largely the same exposure, and you could even say things like, hey, there's a big difference. You can actually sell Bitcoin on the weekends versus you can't really sell Coinbase on the weekend. Um, but yeah, I think that my preference is always to invest in the equities just because that's where I have more of a comfort zone, and I have more of a confidence overall. Like some of these exchanges have gotten hacked, but yeah.
And so we're seeing a pretty nice bounce here in the markets. I think the QQQ and the SPY have both broken through like a major downtrend line dating back to late February now. And I'm wondering, with the signals we're seeing in Prospero being more bullish, when do you know if this is like a bear market rally or if it's really starting something that's more sustainable? How are you going to be looking to like get an understanding of how you feel about one way or the other, the way this bounce is going?
I mean, uh, we're just in such a short-term market, right? I can't, like, in terms of how secure I feel. Like right now, I have to take this bull move seriously. But I'm waiting for the other shoe to drop, and I'm not feeling that secure in it.
And so it's interesting because like in recent streams when we've been talking about what could make the market more bullish, I feel like you were mentioning like when trade deals are actually announced and there's something like real that can come to the markets and be factored in the models and priced
Did I
in.
lose you,
And it's kind
Steven?
of, can you hear me? Hello, hello. Anybody hear me in the chat?
I feel like I lost you for a second. Am I back?
I can hear you.
Can people
Can you
hear
hear
me and
me?
not Steven?
Hello, hello.
I don't know. Okay, I think it's a Steven. I don't know if that was me or you, Steven. Can you hear me?
I can hear you.
Okay.
Can you hear me?
Yeah.
Okay. Um, Okay, Ryan said he can hear us both. All right, we should be good. What was I teeing up? Oh, okay. Like when we were talking about the trade deals, we were thinking when they're actually announced, that could be bullish for the market. But now we've had a bull move and really nothing's been announced still. I'm wondering, like, now, even if deals are announced, is that priced in by the recent move that we've had?
I don't think anything's priced in. I don't think anyone really knows what's going on. I mean, and I think, how much of this is just people capitalizing on momentum versus them having, any kind of longer term faith. We don't know. But what I do know is I'm just very quick to move. And like if I had seen QQQ and SPY net option sentiment, um, in like the 50s after it had been that low before, I'd be extremely bullish. I'd be much more than like I went 5 and 3 over the week, 5 longs, 3 shorts when I added MSTR this morning. And and even then that looked too bullish. So it's a hard market to read. And I think because it's so news driven, I don't even think anyone is that confident in the way they're positioning themselves. And I do think a lot of what we've seen is retail enthusiasm, algorithmic things, because when I talk to anyone on Wall Street, nobody's like, we're back in the bull market. Things are back on. We figured it out. No, not one person is saying that. Pretty much everybody is that I've talked to is where I'm at, which is I'm worried. I actually talked to one person at a big hedge fund over the weekend, and they said they were market neutral towards tariffs. That's how they were playing the market. They basically they were figuring out a way to balance everything and make it neutral to tariffs. And that was their portfolio. And that's, for a quant hedge fund that's normally pretty aggressive, that was a surprising thing to hear, that they weren't really figuring out like, oh, how can I really profit off this? They're really just trying to figure out how to avoid mistakes. And I think a lot of this rally, and we saw the stats before it happened, is retail driven. Um, and I think that has to make you very cautious. I think it has to make you look for upside, but also cautious.
And there's been reports now I was seeing earlier today that they expect a trade deal announcement this week. It could be as early as this week, if not next week. Are you going to be reactive to if you see any Trump tweets or anybody's highlighting things to come later in the day, like we've seen in recent weeks in the market when there's going to be a news story that's bullish for the market? It kind of gets like announced earlier in the day. Are you going to be reactive if you see anything like that, or are you going to wait until the news finally breaks? How do you feel about stuff like that going forward?
Yeah, I mean, yeah, like I said it at the time, I definitely am going to have my eyes out for, Trump tweets, moves in net option sentiment that we've seen a few times. Like we have typically seen like a 20-point move from like open to midday, as a sign that something is turning. We've seen that like twice now. Um, but yeah, it's a difficult market. And then also like what deal is the question, right? Like we heard Trump saying they were talking to China and then China denying it. And then Bessent this morning saying that the ball's in China's court. And the ball being in China's court does not leave me with a lot of confidence that there's going to be a deal with them. So are there deals with other places? And if so, who? Because, we hear a lot of like, we've heard a lot of like, we're talking to 70 countries, blah, 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 but like, what makes me uncomfortable about it is if we're talking to so many countries and everybody's coming to the table, still, where are the deals, right? Like nothing's prohibiting us. Like, yeah, I can understand a deal with China is a little more complicated, EU, but maybe a deal with India or Vietnam, or we're just not really getting like there was talk of the threat and the way everything went of bringing deals to the table, but yeah, what deals when? Like I feel like we this is where we've been for the last like 3 weeks, right?
I just had a cool idea, I think, of when you were talking about like we've seen the signals kind of move like 20 points on a daily basis. It'd be really cool if Prospero had its like own version of the VIX, where you like took a rolling average of like 7 days or 30 days of like the average moves of the SPY and QQQ, and then had it as its own like score. I don't, it would kind of be like momentum almost, right? But it'd be like more of like the overall market VIX type of volatility, ability for stuff to move. Interesting. If anybody is
Yeah,
interested in that in the chat, let us know.
that's worth looking. Yeah, like yeah, the range and how quickly it moves, I think is an interesting volatility metric.
Hmm. So we have to start getting into the earnings companies because this is the busiest week of this earnings season. So starting with fintech stocks because we have two reporting before the market tomorrow. So PayPal and SoFi are set to report. I was originally going to just make it between those two, but then I saw that Robinhood is also reporting later in the week. So I figured I'd broaden it out between those three. How are you feeling about those companies, the fintech space overall? Do any of those three stand out to you as being way better or way worse than the others?
PayPal, Robinhood, and SoFi.
Yes.
Those are the three. I think that's what you said.
Yes, those are them.
Um, I'm worried about all of them for slightly different reasons. I mean, Robinhood and SoFi are kind of similar, where it's just like they're pretty, retail focused, right? But then like the consumer spending touches everything, and I think it touches PayPal like on the spending side. But I think with consumer confidence where it is, confidence is a leading indicator of spending, right? And then you know I think the reading retail trading community is still really active. But if if we see ongoing difficulties and the market even stays tough or very volatile, we could start to see people staying in more, passive instruments, maybe mutual funds, things like that, which kind of is a drag on SoFi and Robinhood and those brokerage driven deals. And then, really we have to think about guidance because all of these things, whether or not they're good quarters or they beat or whatever, which I do still think the economy has been good enough that I expect, a lot of beats. But I think guidance is where you start to see some concern. there,
And so
because we could definitely see people, they have to respond to consumer confidence. They have to, like, if you're Robinhood or SoFi, in addition to the consumer confidence, um, they have to, um, they have to start to say, okay, maybe our business is going to decline before it does. Because we talk about it all the time. You can pay the piper a little now, or you can pay it later at next earnings where you forecasted badly. And then you're dealing with the fact that your numbers are down and people, think you're not able to forecast your business well. And that's a poor reflection on you.
I feel like PayPal was almost like the original fintech stock. It was a little bit ahead of its time. And when you look at the tree of people that started it and the amazing things that they've done like after they left it, do you think PayPal kind of like, I don't, maybe missed its opportunity or just didn't take advantage of the early mover advantage it had? Because I feel like the stock hasn't really done much. It had that COVID bump, but it's just been lagging for a while. And it seems like a lot of companies are kind of either with it now, catching up to it, doesn't really have that clear edge. How do you feel about that?
Yeah. Yeah. I mean, I think a lot of companies have really caught up. Um, and it's one of those things that, um, I think you really have to think about what the future is and not just the present. And I think for them, because they had the early mover advantage, because, I think a lot of things um, could have been done a lot better in terms of, things like the merchants and what Square's taken over. Um, so you have to say, are they really, well, not taken over, but found the opportunity for, where they could have very easily been there. Um, you have to wonder if um, you have to wonder if um, they're going to be able to create new ideas, do well on an ongoing basis. And I haven't seen much innovation for them, so I wouldn't vote with my dollars any confidence in that.
I feel like there's kind of like three different waves of like financial industry today. There's like the legacy banking stocks like JP Morgan and all of those companies. There's fintech, so the ones we just covered, SoFi, PayPal, Square, Robinhood. And then there's like crypto. And if you had to bet on like one of those three moving forward spaces in finance, which one would you choose?
Crypto. I think of the three, if we're talking about growth in the future and how much upside there is, there's downside there too. But we talk about, like, we've talked about since Trump took office, that, like, because of all the potential regulatory things and supportive environment of the Trump administration, I think that really raises the floor, and I don't see that anywhere else.
And so let's start getting into the Mag 7 companies that we have reporting this week. Before we get into the ones that are about to be announced, maybe go over Google for a second. So they had, it's funny, like when we covered Google and Tesla last week, the earnings reactions and what you said about how, the different um, CEOs are able to galvanize investors around their stocks. Like Google crushed earnings and they went up, but now they're red today. And it's just funny to see that reaction after Tesla having the opposite, like being very bad earnings and then rallying after it. It kind of, I feel like, fully shows the concept you were talking about of like how investors are excited about the future of these companies. Do you feel any differently about anything you saw after Google reported? I saw they raised their dividend, and obviously they beat on earnings. So anything to add there, or just kind of more the same thoughts?
Yeah, I mean, I've been thinking about whether I want to um, play Palantir or Meta earnings. And I kind of think of them similar, where Meta already got that bump from Google. It went up pretty well after they announced. So I think Meta has more to lose than gain. And I feel similarly about Palantir in that way. Like, I think if this week looks bullish, I want to get back into Palantir. It was a hard drop. Um, but I definitely I definitely think that um, both of those stocks have more to gain than lose, especially Palantir. I think it's going to do, if the market stays good, I think it's going to run up into earnings. And if I own it, I'm going to get out before, even though I do expect it to have a good earnings. I just think it's the same kind of thing. Any kind of slight disappointment in Meta or Palantir, the way, like, especially the way both, I mean, especially Palantir is run, it makes me nervous. And anytime I see more downside than upside by a significant margin like that, I'm just hesitant to play it. But I'm still debating on the Meta side, just because, they have had a dividend. They could announce a similar thing. They've just been managed so well since the metaverse thing. It's really amazing how far they've turned it around. So I'm going to think about holding Meta, but I also just think there's downside there, and I'm a bit worried about the economy as a whole. But on the other end, that didn't affect Google. But Google's been a lot more, I would say, undervalued than Meta. And Google didn't even have that good of a response to having good earnings. And that's what really gives me pause.
And we are actually seeing the markets kind of sell off a bit here. The QQQ is now down just over 1%. Just wanted to update everybody if they've been watching us on how the markets are moving. SPY is now down just over 0.5%, and Dow and Russell are in the red. So we had a mixed market when we started the stream here today, but now we're red across the board. So we'll keep you guys updated if any bigger moves continue to happen. Looks like the QQQ just went back above, down 1%. So maybe it's hitting a bottom right there, but we will keep our eyes on it. Anyway, so the companies set to report still this week of the Mag 7: Apple, Amazon, Meta, and Microsoft. Of the four, which do tariffs have the biggest impact directly on their business? I'm thinking it's got to be either Apple or Amazon, but maybe there's a surprise. But what do you think?
Yeah, I mean, actually, I don't. The nice thing about Amazon would lead me to say Apple, but I think there's mitigating factors in both. The nice thing about Amazon is Amazon's just a middleman. So whether you're buying things from China or wherever, like, they're just connecting buyers and sellers. Now, I don't know how much people just will want to buy American less, right? Like, and something that I don't know, and maybe it would be good to research, is I don't know, like, in the UK, like, what, because I do know that I've ordered things on Amazon there, and you need to use a different service and blah, blah, blah. But I don't know the extent that, especially in Europe, Amazon is used. Let's Google this. I think this would be Amazon Euro. For some reason, here, Europe, US selling on, oh no, selling on Amazon. Let's just see. Okay, so the net sales in, oh, okay, so it's about 438 billion in the US, and then Germany is 40, UK 38. So I'd be interested. And that's actually the rest of the world is 93. So that's not insignificant. And I mean, I guess it remains to be seen. I mean, it still is like a pretty paltry amount compared to the US. But it'll be interesting if places are just buying American less, and then also how the tariffs, like, affect that and the perception around it and everything. But I think, because at the end of the day, Amazon is about choices, I don't really see it affecting the American market too much. And even, we let off saying this, I think it might even help them a little bit if all of a sudden Temu is not the discount, it's twice as much, and it's not quite the discount retailer that it was before. You might see people coming back to Amazon. Whereas Apple, we've been talking a while about how they're moving things to India and things like, but then you have the added thing where it's just like, I still don't know what's exempt and what isn't, because the messaging is so confusing around it. I mean, I think as of now, phones are exempt, so maybe they won't be, that affected because of it. But I think in terms of where I would say worry the most about what could happen, especially in an ongoing conflict with China, trade conflict, I think, Apple's the obvious answer there. But then you also have to think Tesla. Um, Tesla's Chinese market was not that much smaller than the US, right? And then all of a sudden, where the tariffs are at, I mean, it makes almost zero sense for people to buy a Tesla in China. I mean, they're already like BYD is already going to be cheaper, and maybe it's a luxury good, but like twice as much. Now I think it's what it's running, at least. So yeah, or maybe it was lowered. Again, very hard to keep track of. That is actually the one that I think is the biggest because of how big Tesla's market is. And we say it, they really need to nail full self-driving to get that revenue stream. But yeah, that's even like after talking through it, like if Apple's not exec, it's definitely Apple. That's going to be huge for them. But I think where I understand things to be right now, I think it's Tesla.
And just listening to you like cover the big tech space, it just seems like almost like the risks kind of outweigh the rewards, where it's like you can't really get too excited about the companies, even if like long term you are like confident in them and think they'll grow. It's just like is you just can't get up the gumption to be excited for like the short term, and these earnings reactions, like it sounds like you'd be very surprised to see like a 10% move or 15% move up on a single day, and maybe a continuation from that in these companies unless something changes with the landscape.
Yeah, I think people are going to be more sensitive, and I think that's exactly right. Where I say there's more downside, like missing or concerning guidance is going to send people. We saw what happened with Nvidia, and that was just an update. Is going to send things a lot further down than a good report. And then we say it time and time again. Like I don't think we're out of the woods yet. And what we observe, what you always kind of observe, is when there's macroeconomic concerns, people take it out on growth. And I think that's why something like a dividend is responded so positively to, because the more these, Mag 7s can mature and are viewed more as value, the better they'll fare. But I think, they are growth stocks. Some of them more than others are really priced as growth stocks. I do think that's a nice thing about Meta and Google. They're priced a little closer to value than growth, but I think um, there's a lot of selling pressure now on the idea that tech is growth and those are associated with it. And I think that's what happens. These stocks start to get hit, and people get concerned, and they sell Mag 7 ETFs and things like that. And yeah, I think those really get affected that way, because even if you just think of right people selling their QQQ and their SPY, like major constituents in especially the QQQ are these big tech names. So, every time someone's selling the QQQ, they're also selling, a proportional amount of, these Mag 7 stocks.
Now, something I just thought about, we've been covering this topic now for like 5, 6 minutes, whatever. And this is what, like our sixth, seventh, eighth earnings season doing these streams, whatever the number is. We didn't talk about AI once for Apple, Amazon, Meta, or Microsoft in the entire, segment so far. And I don't think there's been one earnings season that would be true for before this one, since we've been doing the streams. Like there was just so much macro stuff going on that it's like drowning out like these businesses, I feel like.
Yeah, that's interesting because, like, normally instead of me being like, I'm concerned about consumer confidence and what that does with guidance and all that stuff, I'd be talking about, like, oh, these companies might be guiding up based on AI. But yeah, I'm more worried about, downward guidance. And, like, I think to that point, it's very interesting. I remember seeing a headline when I was in Amazon last week that said like Nvidia, Amazon report there's been no slowdown in demand for high performance cloud computing or something like that. And I was like, oh, I expected to go back to Amazon and see like a big green candle, but I didn't see that, right? And I think that's the market that we're in right now. I think this because AI has like always been like or has been for a while, been this thing that's going to like, create exciting guidance, talk about more future earnings. I think the conversation around future earnings, I do think the conversation is much more around like, okay, how much might they, lower their projections based on these risks instead of how much are they raise their projections based on AI. I think that's a really good point.
It seems like it could almost be like the moment of reckoning because we've kind of highlighted how like a lot of this AI stuff is unprofitable, just trying to grow right now. But maybe as that was looked at positively because everybody was so excited about AI, if it's dragging on the earnings now in this report, maybe it'll be viewed as negatively by the market, and some AI players drop out or lower their spend or just don't focus on growing it as much, try to become more profitable. Could you see that happening?
Maybe, maybe. I mean, I think there's a genuine concern among, a lot of people that like these leaner AI startups are going to come for a lot of their business. I mean, look at what's happened with AppLovin, right? Like they have a meteoric rise and they're in ads and they're not one of the major, right? They're not one of the major ad servers at the end of the day. They're not Meta, they're not Google, and that's the kind of thing where you're starting to be like, okay, maybe like a leaner company can come along, be highly profitable, be creative, and that's just one example. But no, I think these companies will continue to invest heavily in AI because I think they're concerned about being, replaced by leaner companies. If you think about, you know, this historically, a little bit and you think about like for example how Google and Amazon have like changed the shopping experience, right? I mean, most people like, yeah, they'll go to some other sites, but like there's so many people now that go to, that just Google search or search in Amazon or whatever. They were the lean companies that came in and said, okay, there's a more efficient way to find things, there's a more efficient way to buy things, find the right price, search them out. Um, and I think they're probably concerned that they're the bloated old companies that are going to have their systems replaced. So no, I think they have to invest in AI, but I do think it's become a bit of a more complicated proposition because I do think you have to really manage your profits, and they're going to have to balance that and figure out what to cut. And that's ultimately why I think it's headcount. We've talked about this for a long time. I do expect to continue to see headcount reduction at these companies so they could spend on AI and also manage their profits. And I think it'll probably be more aggressive now because of the economic worries. I think before they might have been a little slower, but we might see, especially if we start to see, especially if we see a recession, I think we might start to see some pretty aggressive headcount cuts at these companies.
And so Nvidia is one of the Max 7 that we haven't covered, but they also were red today to open up the day because there was a negative story about competition. Huawei announced that they're releasing a new AI chip that is supposed to be highly competitive to the Nvidia chips. So another encroachment on the Nvidia moat of AI. Uh, we've been covering all of the list of risks that you've been talking about Nvidia, but I guess just add one to the list. And let's see where Nvidia is at live, how Reddit is here today. But just more concerning news for Nvidia. Let's see, where's it at? It is currently down 3.33% on the day. So just an update. And I think China is a legitimate competitor, probably you would say, right, Huawei, for Nvidia?
Yeah. Yeah. I mean, and we've been talking about that. The more this kind of trade war goes on, and maybe you start to limit down the Nvidia chips that can go to China, the easier it is for them to catch up and substitute. And like, I've been here all year where I've said I was worried about chips even before all this happened, and I'm very worried. I would not own Nvidia stock right now if I was anyone.
It's a weird day today in the chip land. I have a whole list of them. They're all red, and then Intel is the only one that is slightly green today. Have any idea why they would be a differentiator today? I think they had earnings last week and they were pretty bad. So I don't know if people are just buying value after that move or what, but
Yeah, I mean, what moves the market these days, right? News, things around Trump. So if the market's down, I think it's worries about the trade war escalating. And I think people definitely saw like that those Temu charges start coming in. And I think, the perception around the trade war, I think is just as relevant as the actual trade war. And I think when people look at that, they're definitely worried about growth stocks getting hit. They're definitely worried about like how these international sales might be affected by a complex new web of trade agreements. And then I think, Intel definitely gets a bump around being like, oh, this is the company that we think is going to be helped, subsidized in this new world where I think everything gets more complicated. And I think it's really that simple.
so just looking at the markets again while you're talking, it looks like they're all kind of finding lower ranges. QQQ is down 0.92% now, but I see the VIX is up 5.5% now on the day and kind of jumping a lot in just the last 30 minutes or so. But it's back down to 26, the VIX now. Are you going to be watching that as, kind of going back to that topic of like a bear market rally or a real rally? Are you going to be looking at the VIX closely if it like breaks 30 or any levels you're watching, or how important is the VIX to you in, the future moves we'll see in this market?
None in particular, not a level in particular. I mean, it's a number that I'm watching overall to, and always am, to assess, like, I think how people feel. And we've been talking about this, that in terms of the trade deals, right? We either need to, if we want to sustain bull rally, we need to see some of these deals materialize. But we've also been saying consistently that if the deals don't materialize, there's a bit of a time component to it, where it's like the longer we don't see those deals, the more people I think start to get nervous about, a potential escalation. They get nervous about, you know, us basically needing to do, other things, maybe ramp up the pressure in another way to, force a deal and create more instability. So yeah, I definitely think that that's something that people, like watching the VIX, watching, things like net option sentiment as a barometer of how confident people are feeling if deals don't materialize, I think is super important.
So I saw that Nvidia had a negative headline earlier today, and I couldn't help but rethink about your take on Netflix versus Nvidia. I was pretty surprised when you said that. So now it's ingrained. We have a short about it, so I'll have to come probably like 11 years and 2 weeks. I mean, 11 months, 2 weeks from now, the full year. But I was thinking about it from more perspectives. I was thinking, I wonder how you feel about Spotify. I feel like they're kind of the Netflix of the music industry. Their stock has been pretty strong, like Netflix. So, do you have a similar feel, take, bullish thesis on Spotify as you do Netflix? And if you do, which industry would be the better to be the dominant player, music or streaming?
I mean, I think I mean, it's hard to say. I think the content is, let me put it this way. I think the basic version of Spotify is a lot better than the basic version of Netflix, even if there even is, because there's a free version of Spotify too. There isn't a free version of Netflix, right? So I think right there, I like the businesses in terms of the value of the content. Um, where I see content getting cheaper and cheaper, for Netflix, I'm not necessarily more like AI generated. I'm not necessarily sure I'm confident about that as it relates to music. And I think the other thing, um, I think that Spotify might not be the mature version of it. I could actually see, because of how like screwed musicians are in this, like, there's no equivalent. Like, actors get paid, especially the big ones, get paid a lot of money to make movies. They're doing well, but and they don't have to like tour. It's not equivalent, but musicians have to tour to make money, and you definitely see a lot of them pissed off with the system. Like when there's negotiations, you see actors talking about it, but there's less actors like consistently saying that they need a change. And I think that's because they have a much better arrangement where they show up and do their basic jobs, and they don't have to like be out every night of the week performing. I think some people really enjoy the performing aspect. But yeah, like that's my one concern with Spotify. I'm not sure. It might be because you might say, what can musicians do? And there's an argument to that. But I'm not sure that's a mature final version of it where it's going to be this cheap to get the music, to play the music. Whereas when I look at Netflix, I actually see, more and more AI generated content driving down that. I don't really see AI music being something that has the same demand.
And when people have been covering Netflix recently, even after their earnings, they were actually calling it a recession stock, being that they were saying like nobody is going to cancel their Netflix subscription even if the economy gets weak. And it seems a bit counterintuitive, but maybe it's true. So how do you feel? Like, do you think these entertainment, Spotify, Netflix, and others like them are going to do well or be looked at as more safe even in a weak economy?
I do definitely think it's safe. Um, because yeah, I mean, it's one of those things where sure, you could argue that it's easy to cut back on, but if you're cutting back on other things, going out to dinner, going out to the movies, things like that, what is there and at a fixed price that you're already paying for? Netflix. Um, and I think that non-free version is a big thing too, because I think people, could go back to the free version of Spotify. They could listen to the radio more, whereas I don't know if it's the radio, something else. But I think there's better free alternatives to Spotify than there are to Netflix. You're going to be paying for any streaming. And Netflix is kind of the bargain streaming service when you think about it, just because of how much content they have. It isn't always the highest quality. But I do think Netflix is kind of like a consumer defensive good in that way, where it's like cheap and you can, you're kind of getting something in bulk and it can keep you entertained.
I feel like the free version of Netflix is YouTube, so maybe it'll benefit them more too.
Yeah. Yeah, but I think for a lot of people, it's like they want garbage. Like I think YouTube is I think YouTube is too educational for a lot of people.
hmm we have one more topic to go through here today, so let me just say thank you all, 1,800 of you that have watched the stream so far. If you have any questions, comments, concerns, let us know in the chat. We will be happy to answer them. So our last topic today is about Coca-Cola, Starbucks, and McDonald's, three more companies that are set to report this week. I wanted to bring them up because we had a topic last Wednesday that we didn't actually get to, but it was about how the Trump administration is looking like it's going to ban synthetic food dyes. And when this was announced, it was they were saying PepsiCo, General Mills, Kellogg's, a lot of cereal, candy, chips, sports drink companies are going to be affected. Are you going to be looking for if Coca-Cola, Starbucks, McDonald's mention anything directly about that concern or topic in their reports? And do you think it will weigh on these companies going forward, these more processed food companies, like the whole list of them?
Definitely. Yeah, I think it's absolutely a concern. I also I would look to the companies to say how will this affect their bottom line? Because you know, you never know how easy it is. Like if you look at the fake sugars, for example, right? They just go from saccharin to aspartame or whatever. There's always some new one. And so it might be a little bit of a supply chain disruption or whatever, but I think if we were doing it in earnest and we were just no, actually none of this. And I mean, who knows? RFK, I'm guessing it's driven by him, seems to really care about this stuff. And maybe he's actually trying to create substitutes that will actually be less, chemically damaging, whatever. But no, anytime I see a law that's well, just this one, that one, and the other one, it's always very easy for me to think, there's probably easy substitutes for them that these companies have lined up ready to go. Because a lot of times these substances are banned in other countries too. So they already have some other thing that they have to use in another country. And yeah, maybe it's a little more expensive or whatever, but I do think it's something that we should look to the company on, because yeah, that's something that they could probably be very specific about. Just be oh, if we can't use this chemical, it's going to have this kind of expected impact on our profit margins, bottom line. Anything a company can forecast well like that, they probably want to be very upfront about for the reasons that we talked about. Because, if you say you're going to have a particularly hit to your profit margins or your costs or whatever, that's coming anyway, you just look professional. If you don't say it, like, not only are people going to have the negative impact, you're going to look like you don't really know your business and you're not on top of it. So yeah, that's the kind of thing that I'm sure, if it is a material impact, maybe it isn't, like we're saying, they're like, I'll just substitute this in. But if it is a material impact, I would expect to hear it on the conference calls.
Okay, so almost time to turn over to the model portfolio. I want to take a look at SPY and QQQ real quick. Seeing 52 for the SPY still in net option sentiment, and 50. Wait, did I say QQQ? 52 for the SPY and 50 for the QQQ. So still seeing good readings. We're seeing the market a little bit weak today. How are you feeling before we head into the model portfolio? What are your thoughts?
I'm feeling concerned. I'm feeling like maybe it's, maybe this bull run is wearing off a bit. But when you have those net option sentiment numbers, maybe we'll see a recovery this afternoon. That's what makes this, like, so hard to read. But that's the other thing that we've seen. If a select few people know that there's bad news coming, that's not necessarily going to show up in net option sentiment. Because if the majority of the market is not aware of something, a small group is, that's not necessarily enough to move net option sentiment down. And especially, this is the other thing we have to watch out for. I think especially with all of what circulated about the options buying and everything prior to the pause, you might have funds a lot more concerned about using the options markets to bet, say, buying puts or whatever. So they might just be shorting instead of buying puts. So it's not as apparent as it was last time when we just saw those massive buying increases.
Okay, well, the time has come. We'll see what the final moves are for the day in the model portfolio. We'll catch up with you on the other side in the Prospero lab. Everybody stick here with me. It'll just be a minute. George is going to tune right back in, and he's going to make live updates to the Prospero model portfolio. I hope you guys enjoyed all of the topics that we covered today. Obviously, we have an exciting week ahead. There's sure to be fireworks after the markets going forward this week with the earnings that are on deck. Let me take a look around the market, see if we have any moves that are big that should be reported to you guys. First, taking a look at this QQQ and SPY. See if there's any changes there. Still kind of at the lower ranges that they were at the last time I updated. QQQ about 1% down. S&P 0.2%. Dow and Russell are still slightly red, but ahead of the QQQ and SPY. Let's look at the Mag 7 stocks, see how they are performing ahead of their earnings. Okay, Apple is red, Amazon's red, Meta's red, Microsoft, red across the board, Tesla, Google, all red today. Google is now back below 160, so that earnings move is not sticking. Take a look at NVIDIA, see if anything has changed. We did look at it pretty recently. Now still at 107, down 3.33% on the day. So nothing to report there. Take a look at the VIX, see if there's anything been changed for there. Actually, we have to report Bitcoin too, right? Because that was a major highlight in the newsletter this week. So we got to check and see how is Bitcoin doing with the little bit of redness we're seeing in the markets. Bitcoin is down 0.04%, so basically near the flat line today. We'll see how it continues to move. It was up as much as 2% at one point, so kind of fading off with the market. I got to check in on you guys, see how you're doing, liking our video on YouTube. Likes and comments, especially when you comment live in the live stream, really help with the YouTube algorithm, help our channel grow. So if you enjoy the live streams, what we cover, feel free to like the video and comment on the live stream. It really helps us out. So thank you if you guys do that. We're up to 11 likes, so we hit double digits. There we go. Not bad. Thank you all. So we're just waiting for George to tune back in, guys. Just hold on with me for just a moment here. We'll be back in any minute. And if it's your first time, what we're about to do is George will share his screen and do live updates to the model portfolio that is actually paid for letter in the in Prospero Substack, but you'll get to see it for free on here. So that is the benefit to sticking around, and you'll see what we're adding and dropping, how we're feeling about the markets, and George will take you through the behind the scenes, the entire process. So it's pretty cool. Stick around if you want to see that. Um, and if you want to see any stocks also checked out in the Prospero app or in what George is looking at, just feel free to comment them. George is back in here now.
Yep. Hold on, I'm just getting some things set up. Okay.
Taking a look at the Prospero short-term bull list in the app, all the usual suspects, but then there is GME and Decker's Outdoor, kind of unusual maybe.
Yeah, I've seen that before. Oh yeah, look. Oh, I didn't. I gotta share. Okay. Okay. Okay.
No surprise to see tech and consumer discretionary lag along with the large cap growth. We will look for bears in those categories and perhaps some real estate. And utilities longs, but we may just reduce our overall long exposure and not add much there as well.
Let's get this. All right, well, momentum score is not pulling, so I guess that's all for us.
I guess the update will just be for the people who are subscribed to the letter today. But you guys can tune back in Wednesday or subscribe to the letter and you'll get to see the update when it happens.
Yep.
No.
All right. Thanks,
right,
everyone.
everybody.
Any questions?
I don't see any questions. I just had one for you. I had a question about your thoughts on Jackson Dart.
Oh, I mean, I like the rest of their draft a lot better. I wish they didn't trade up for him. Like there were so many QBs on the board, but it's nice to have a QB that isn't Daniel Jones.
There you go.
I'm happy about it. And actually, when I dug more into his stats, I was actually impressed at how well, the way the media talks about him a little bit, like he's like very inconsistent, but his stats were very good. in the
It's
senior
just
season. So
it's starting to bother me when people say connect Brian Dable with Josh Allen as if he's the Josh Allen whisperer. And I think Josh Allen would have been successful no matter who was the coach, but we'll see. We'll see.
yeah, I agree.
All right,
And the
everybody.
Giants don't get much credit picking a QB when they recommitted to Daniel Jones and then they passed on Bo Nix, for example, last year. They don't exactly like whatever they're doing they don't inspire a lot of confidence.
So no model portfolio, but a little bit of NFL today. There you
Yeah.
go. That's
All
everybody.
right.
We'll see you back here Wednesday, 3 p.m. Thanks for tuning in. Bye, guys.
Thanks everyone. Bye.